Good morning and welcome to Markets Now. I'm Michelle Rook along with Scott Varlick with Quema Varlick, and we're seeing a lot of green on the board with the exception of a few of the hog contracts. And Scott, I want to start off talking about the cattle market, some strong cash trade in the north after we had the close yesterday. So I haven't seen anything in the south, but talk about that.
Yeah, the northern cash, which has been the market that's been dragging just a little bit, is finally seeing some life. We're seeing some more interest from packers. Early in the week, there just wasn't a lot of bids, people looking for bids. And now they're starting to surface and starting to see all the players involved, the majors, the minors. It's looking okay. So we are hearing this morning up to some 160 picked up bids that are there. It started the trickle at 158, then some 159. There's still plenty of guys holding 160 and now holding for it. And I have heard it passed a little bit this morning. We're tighter on numbers. We know that. We've been harping about that for years now. So we're kind of getting in that time frame. But loving to see a little bit of traction here. We've got some better weather maybe to dare to ask for a little bit more. I think coming off of some of those rough weather patches, guys were more interested in just keeping stuff moving, get it out of here. I need room. I need to clean out my yards, whatnot. So starting to see that pick up a little bit. Maybe there's a little bit more backbone behind some of these producers to ask some higher prices.
Yeah. Do you think the South has got the leverage as well this week?
I think they do. I think the entire industry, I think North and South has some more leverage, and keep hearing how tighter numbers are in the South as well. It's a nationwide kind of situation, I guess I'll call it. But you've got high feed costs in the North, and talking about how these feed cost of gains are so high. Well, imagine what it is in the South. Having to ship your corn to Texas and pay that even higher yet. For some of that corn to get down south. So the feed costs alone are really tightening up these numbers in the feed yards. And I think that's going to give everybody a little bit of leverage here going forward.
Good. So 254 dressed is what we saw as well, which I believe is about $4 better than the weighted average, in addition to the live sales that you talked about. We did have some deliveries this morning against the Feb contract, but really the whole board is responding pretty positively here, isn't it?
Yeah, expected maybe Feb would have to decide whether it's going to hold on to its gains here, and it didn't even think about moving lower today, up 30 cents here as we're speaking right now, in the face of just 10 deliveries coming in the north. Cash was a little bit weaker in the beginning of the week, so I wondered if we wouldn't see some deliveries at some point. As cash was picking up, I thought it was a little odd time that it happened yesterday, as we're getting a little bit of traction here. So that's the first wave of deliveries. We'll see if there's more, but Feb is shaking it off above 161 now, even still higher than any of the cash that we've had, just with that optimism still on that, hey, we can move this market higher. We're in a sluggish demand period right now in February, which usually that's typical. If you want to take a barometer of the demand, it's usually not February that you look at, but I do think there's some interest that they want to start stocking up on some of this meat going into the spring season, into the grilling season, where you get your peak demands. So, and I am hearing a little bit of that. Some of those middle meat brokers that will get it from the packer and ship to retailers, they're trying to stock up. I mean, everybody's fully aware of how tight this industry is and how tight it's going to be for a substantial amount of time. Mm-hmm. So it'd be time for me to say, hey, let's grab some of these February cattle, some of this, in this little bit of a lull that we have in demand. Let's stock up on this now so we have it for the later.
And, we kind of saw a little consolidation off the contract highs on Tuesday, but I wouldn't be surprised if we're not back up into those areas here sometime today. What about the hog market? Certainly we felt like maybe the cash market had bottomed, the lean hog index had started to turn, but yet it's been a really tough go here trying to get any momentum in this hog market, hasn't it?
Yep, you're exactly right there. It was a straight down move that kind of took your breath away on the way down in the hog market, a pretty swift correction. And the funds were a part of that, taking a big short position. And it's been a little bit of an arm wrestle. The fundamentalists are kind of seeing those little cash rallies and thinking maybe we found it. Maybe we're turning around. We got through that big supply in December, in that January timeframe that was expected. And we're trying to get to the other side of it to where we start to get tighter numbers. And anytime you hear maybe there's a packer looking for hogs, the weights are really being corrected now, none of that's really sticking yet. We can't get a couple days in a row of some decent news to try to bottom this market yet. The funds are still defending their position. Yesterday, there was the talk of an 84.90 number on where the funds would maybe have to start to bail some of those positions. It ticked just above it and quickly smashed back below it. So it looked to me, in my opinion, that the funds were defending that price and willing to try to stay on the short side there. So it's quite an arm wrestle. I don't know that the fundamentals have enough news to really just make this a let's get going higher market. I see summer hogs at $1 yet. It's not like we're down in the gutter yet. So futures are trying to say we can recover some, but we're still at some decent enough prices out there that it's tough for me to just sign up and say, hey, we're way too cheap and we need to move higher.
Yeah, and Feb goes off the board on Tuesday and expires, and that leaves April as the front month, which is at about a $10 premium, and that premium gets bigger in the back month. So we'll have to see what we do when that goes off the board. Okay, let's talk about this corn market. Technically, we didn't have the best close yesterday. We're back up a little bit this morning, but really we just continue to be range bound. And the good news is that basis has been really strong here in the West, hasn't it?
I think that's what's holding corn where it's at.
Right.
You've got the strong basis numbers continuing on. Thought maybe after the first of the year that we'd really shake loose a lot of grain from farmers, and that hasn't happened. There's still a positive basis, extreme positive basis in much of the country. So it's holding on strong. The futures are trying to tell us that we're going to get this pipeline filled up. We're going to raise a good crop. Maybe the demand has slowed enough that we're gonna lower these prices, but with the basis hanging on, the futures just cannot break any further. So it's tough to talk about these daily moves in the grains. You see an up 6, and but really, wherever we went, we're still right here at the same levels that we've been spinning in this range. So you're just seeing it in a tighter range, and spinning. The options are starting to just deplete. As it's pretty content just to sit here and spin. So I think that's going to be the case going forward here until we get to the end of March, when you start talking acreage report on March 31. Maybe it'll be a week ahead of that when we start to see a little bit more movement here, but it's poised just to stay in this range here as of now, as we have, okay, maybe in the future we're going to break, but as of now we can't yet because the basis is still hanging on too strong.
Yeah, and day-to-day moves really get tied in with a lot of days what the wheat market is doing. So yesterday wheat had a horrible day and corn followed, and we're back up today in both. What about the soybeans? We keep flipping back and forth there, really depending on the forecasts in South America and what we've done or what we're doing with these meal oil spreads. But I think most of us can agree that this market is held together much better than expected with this big crop coming in from Brazil.
Yep. In the face of a big crop in South America, it doesn't act real scared, hanging on very strong. And that's been one market that's maybe got some producers a little bit interested in looking at some hedges because of that news. You've got a large crop down there. We're feeling like our weather pattern has maybe shifted in North America, that we're going to see some moisture this year. Who knows on that category, but that's the feel right now. And beans continuing to follow on and hang on strong. Saw some news this week. Yep, China and Brazil even trying to make it easier to try to do business together. So that's happening. But the bean market still hangs on strong. It's been impressive in my mind. I guess I didn't see the need for it to continue to hold some of these higher prices. I thought I'd expect a little bit more pressure there, but so it's out producing what I thought it probably could.
Yeah, I don't think you're alone. Thanks so much for joining us, Scott Varlick with Kooima Varlick, and that is Markets Now. I'm Michelle Rook.